Good morning. It's Tuesday, July 23rd, about 6 a.m. Central Time. All right, the precious metals are mixed after yesterday's flat session. If you're watching this video via YouTube or an email directly from me, there won't be a video tomorrow due to work travel. However, I will send out the Metals Edge. It's a new research piece that only covers gold and silver. It gives you actionable trade ideas in the futures markets. It gives you support and resistance from a swing trader and long-term trader standpoint. It has algorithmic support and resistance levels for intraday trading, and then it gives you the trend reversals as well. So tomorrow, a seasonal trade in the gold market has worked out 12 out of the last 15 years. I'm going to break that down. I'll put it in the Metals Edge email. If you want to see it tomorrow, email info@Blue Line Futures, and we will forward you tomorrow's email. So trust me, you want to see it. So looking at the gold market, it's up $14 overnight. 2409 is where we're trading at right now as of this video, and that is also the high of the trading session. Now silver paints a slightly different picture, down 7 cents at 29.24, really getting hit by the copper market, which continues to slide lower. Remember, silver is partially an industrial metal, so that tends to weigh in on prices when that type of demand isn't picking up. So US equities, they rebounded sharply from their worst week since April as market participants really shrugged off the volatility in this US presidential election, and they're focused on buying up risk assets. The rise in stocks had suppressed the chances of a July interest rate cut down to about a 2.6% chance. If you go out to September, that has also come off a bit now. It's about 94.1%. Sounds a little bit like I'm painting a much more dire picture because last week it was a 100% chance that the Fed was supposed to cut rates in September. So it has come off just a little bit. It just means that some things are kind of working themselves out. You start getting a little bit of optimism in the US equity markets. It kind of dampers that interest rate cut because you really need to see the consumer struggle in order for the Fed to really just come in there and start whacking rates. So if you look at other things here, concerns about the Chinese economy and the details surrounding their economic recovery painted kind of this sour picture on the commodities such as copper, crude oil, and platinum. So that's why I said yesterday they're starting to slack a little bit here and they're starting to lag in some of the markets where US agricultural products came back with an explosive rally, and then there's also chatter of a new Ethereum ETF, and it's caused some volatility in the crypto space. So cryptocurrencies right now down just a little bit. Bitcoin down $1,570, Ethereum down $16, trading at just right at about $3,500. So today we're going to see, from an economic focus standpoint, existing home sales. The forecast is for 3.99 million. Previous was 4.11 million. It's a leading indicator of economic health. So you want to see people selling homes. You want to see people rotating out of homes. But the new home buying is where I'm going to be focused at because we're seeing people sell off properties, but at these high interest rate levels, they're not rolling it into new properties. Then we're also going to see the Richmond Manufacturing Index. It's forecasted at -7. The previous was -10. Above zero indicates improving economic conditions. Below zero indicates worsening conditions. So this is a bit of a lagging indicator because a lot of this has already been factored in. So getting back to the metals here, gold continues to consolidate around 2,400. Traders are still digesting U.S. politics, the Fed, the direction of the dollar, and then the bounce back in two-year Treasury yields. If you haven't seen a chart of two-year Treasury yields, basically they sold off and they bounced back up. We're anchored right around 4.5% being the resistance points. We're a little bit lower than that. That's why gold futures are coming a bit higher. But if you look at the chart, it looks like a mini U, looks like a double bottom on the chart as far as two-year Treasury yields. Same thing with the dollar index. Look at a daily chart on that. Go back to the previous low. You'll see that it was a wash out there. It snapped back up, and then gold futures were under some significant pressure. So that double bottom there is the key on the gold, or I'm sorry, yeah, on the gold market and also on the dollar. If the dollar could break that double bottom, you should see gold futures continue to make leaps and bounds and threaten that all-time high. So gold futures on Monday, yesterday, trading in about a $29 range. The high was $24.14, so you want to keep an eye on that as today as a resistance point because we breaking out over yesterday's high. The low $23.85. We break below there, you really don't want to see that kind of sell-off, and we settled right at about 2,400. If the bulls can't defend 2,400, the 50-day moving average at 23.75 would be the next logical support level. So looking at the silver market futures, they saw pressure from outside markets like copper, the further deterioration in the Chinese economy. Again, like I said, China laid out their economic plans for recovery, but traders were looking for a lot more details to really cement that recovery. So futures traded about a 68 cents range yesterday, the high 29.61. So looking at futures here overnight, the high 29.48. We got to see if we could break over 29.48. Chances are we can move up to 29.61. The low was 28.93, and we settled at 29.31 unchanged. The impact of it being 54% industrial metals and the disconnect from the gold market pushed the gold-silver ratio to about 82-1. We're neutral on our trend discovery system. This is a swing trader standpoint and a long-term trader standpoint. It's neutral at the moment, and it barely holds on to bullish trend at the moment. So you don't want to see copper futures make new lows. You don't want to see platinum break 951 because that should drag on the silver market. It'll flip silver to a bearish trend. I'm not saying that I'm bearish on silver for the long run. I'm just saying a temporary greater washout could occur, and that's why I would recommend that you look at longer dated call options because it's got a lot of work to do to chew to the upside in order to break back to bullish trend. Or if you're going to add futures contracts or other derivatives, do it in a light manner because of the fact that a washout could occur and it could continue to move down. So you got any questions, give me a call. I suggest that you look at that Metals Edge piece, especially if you trade futures contracts, because I lay it all out on that particular report. My number 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.